Hello and welcome to Cypress Associates' innovative wellness insurance program, Bene-Fit.
Welcome. I'm Barry Glenn, the president of the Bene-Fit Group, and I'm excited to introduce the latest development in our mission to provide affordable benefit solutions for every working American, the Bene-Fit Group Hospital Indemnity Policy. At the Bene-Fit Group, we're passionate about helping Americans improve their health while saving money on insurance benefits through our wellness program. Our company is made up of 4 key divisions: sales, client services, enrollers, and a team of wellness coaches. Together, we created Bene-Fit to be an engaging program that helps employees develop healthier lifestyles that reduce their long-term health costs, all at no financial risk. We've developed this presentation to familiarize you with the Bene-Fit program. The presentation will show you how it works and why it is such a valuable insurance product for you and your clients.
Let's begin by going back to 2010, when healthcare reform was first introduced in the United States. The law had 3 key components that dramatically changed health insurance. First was the removal of pre-existing exclusions. Insurance companies could no longer deny you coverage if you were already suffering from a medical condition. Second was the removal of lifetime maximums. Insurance companies could no longer drop you or deny additional coverage for a particular condition, like cancer, after you had reached a certain amount. Before healthcare reform, this was standard procedure. And third was the introduction of minimum loss ratio requirements. This was a requirement that insurance companies spend 85% of their health insurance premiums revenues for healthcare claims and other related expenses. Since that left only 15% of revenues from which to pay all their other expenses and still make a profit, this made it much harder for insurance companies to remain profitable. As you can imagine, insurance companies had no choice but to raise rates if they wanted to stay in business, resulting in significant rate increases in health insurance premiums. Employers and employees immediately began to look for ways to reduce those costs, often by increasing deductibles or decreasing coverage. To illustrate how all of this works, let's begin by looking at how healthcare dollars are being spent now, according to the U.S. Institute of Healthcare Informatics. Think of a company's employee workforce as being divided into 3 main groups, who we call the chronically ill, the dollar in, dollar out, and the ticking time bombs. Let's start with our first group, the chronically ill. As the name implies, these are employees that require a lot of healthcare support. Believe it or not, in terms of healthcare claims, just 1% of the workforce consumes 25% of all healthcare costs. Another 4% of the population consumes the next 25% of total costs. That means a mere 5% of the workforce, the chronically ill, consumes an entire half of a company's healthcare costs. This is because members of this group are typically battling major illnesses like cardiovascular disease and diabetes, which require a lot of doctor office visits, hospitalizations, and prescription medications. Next, we have our second group, the dollar in, dollar out. They make up 45% of the workforce and consume about 47% of the costs. As the name implies, they essentially pay for themselves by visiting their doctor regularly for preventative care and keep themselves relatively healthy. And last, we have our third group, the ticking time bombs. They make up the remaining 50% of the workforce, but consume only 3% of the medical costs. On the surface, this sounds great. It seems like this group is subsidizing the unhealthiest 5%, the chronically ill, while the healthy employees pay for themselves. But in reality, the ticking time bombs tend to consume so little healthcare not because they are healthy, but because they simply don't go to the doctor. In fact, statistically, almost 1/10 of this population suffers from undiagnosed diabetes. It comes as no surprise that, with the lack of knowledge and preventative care, many of these individuals will eventually experience a catastrophic medical event, like a heart attack or stroke, and immediately jump from the lowest cost category to the highest. In other words, a lot of these ticking time bombs will join the ranks of the chronically ill because they're not practicing preventative medicine or taking care of themselves. In fact, in a recent study by the U.S. Department of Health and Human Services, they predicted that the number of chronically ill Americans will unfortunately triple from 2010 to 2020. The goal of Bene-Fit is to provide valuable health information and coaching to all employees with a special focus on changing the behavior of the ticking time bombs in order to avoid them experiencing a catastrophic event. By achieving this goal, everyone wins. Health insurance costs are reduced for the company, employees are healthier, and productivity increases due to lower absenteeism. Let's look at how other wellness programs struggle to address this challenge. Then we'll see how Cypress has created a superior program that really works. The focus of a typical wellness program is to get a company's employees to undergo a health screening in order to identify undiagnosed illnesses like diabetes. And since the chronically ill are already sick and the dollar in, dollar out group is relatively healthy, the challenge is how to motivate the ticking time bombs to join the wellness program and improve their health. But if they're already not going to the doctor for checkups and they don't have a healthy lifestyle, the chances that they will opt into these programs are minimal. At the same time, most wellness programs offered by large health insurance companies fail to directly engage employees with health coaches. They also tend to offer benefits that are not very compelling. With their programs, the burden for getting and keeping employees engaged falls on the company's HR department, forcing them to become wellness cheerleaders on top of their existing workloads. In addition to the health screening, employees typically earn points for participating in the program by doing things like wearing a fitness device, exercising, or getting a flu shot. Employees accrue these points as virtual currency and use them to buy things like movie tickets and hotel stays. Employers receive a small discount on their health insurance premiums for the participating employees. It's not surprising that in this scenario, the participation rate among employees is low, and those who need the program the most are still unlikely to participate. This low participation, in turn, delivers minimal cost savings to the employer, and the program proves to be ineffective. Another type of wellness program is offered by providers not related to the health insurance companies. These entities charge an upfront setup fee and a few dollars per employee every month. With an investment in this type of program comes with a hope that it will inspire employees to improve their health, which in turn may reduce future costs. This chart illustrates the potential savings of these programs. The blue line represents a company's 5-year projected health claims utilization. The green line represents the potential claims utilization with one of these programs. This represents the cost of the program to the employer. Claims go up in the short run because presumably more ticking time bombs begin going to the doctor for routine checkups. There's also the initial setup cost, which is also reflected here. The hope is that by getting more employees to the doctor for checkups, overall employee health will improve, resulting in a decrease in long-term claims utilization. The difference between these two amounts is the company's return on the investment in the program. This is a tough sell for employers for 3 reasons. They have to make an upfront material investment. Short-term medical claims increase because this program initially motivates more employees to see their doctor for preventative care. And the program's return on investment is unknown. While in theory this should pay off over the long term, results tend to be difficult to measure. Additionally, these programs' internal cost models are based on participation rates among employees being as low as 3%. With low participation, what are the chances that the employers are going to materially impact claims utilization over the long term? Many employers say, why bother? And if participation turns out to be higher, the cost of the program increases, thereby reducing or even eliminating potential future savings. With high setup costs and significant risks that the program will not produce a return on investment, most employers choose not to pursue this route. At Cypress, we looked at these challenges from both the employers' and the employees' perspectives and thought, what would a successful wellness program look like? Our answer was simple. It would need to provide 3 things. A successful program would engage employees in ways capable of changing bad behavior, leading to a healthier and more productive life. It would eliminate upfront costs and risks to the employer with a program capable of widespread adoption, and it would provide both short-term and long-term payoffs that would improve the financial health of the employers and employees alike. Cypress's Bene-Fit program does all 3. Here's how. Let's look at the 4 ways in which employers can measure value received from Bene-Fit. First, the company will save $600 to $1,000 annually per employee in payroll taxes because wellness insurance premiums lower the total employee taxable income. Second, employers can expect up to a 20% reduction in claims utilization over the first 3 to 5 years. That could result in another $1,000 annual savings per employee. Third, the company enjoys the increased productivity that accompanies lower absenteeism and a healthier workforce. And fourth, There is no risk or out-of-pocket setup costs. Next, let's look at how employees can measure value from Bene-Fit. Let's walk through an example of an employee's paycheck to see exactly how. Let's start with a sample employee's base pay of $4,000 per month. These two columns represent the employee's paycheck with and without Bene-Fit. The cost of the wellness insurance of $720 is deducted from gross pay. Since this comes out of pre-tax income, it reduces taxable income and therefore the amount of taxes that are deducted. Program participation earns our sample employee $665 in monthly claims benefits, which is added to the post-tax income, resulting in an increase to the employee's total after-tax pay from $3,000 to $3,125. The increase of $125 goes into the employee's benefit bank, which in this case pays for both life insurance and critical illness insurance. The net effect to the employee, besides the opportunity to improve their health, is that their take-home pay does not have to pay for these additional insurance products. Bene-Fit pays for those instead, and employees get valuable additional insurance products just for participating. Every enrolled member in the Bene-Fit program will enjoy insurance benefits that include payments for daily confinements, ambulance trips, doctor's office visits, and intensive care stays. These insurance benefits are provided to everyone, regardless of the additional a la carte benefits they choose to purchase from their Bene-Fit bank. The Bene-Fit Wellness Program makes it easy for employees to participate. First, employees are matched with a qualified personal coach who helps them set realistic, achievable goals to improve their health. Employees then only need to record their monthly progress with their coach through email, text, or phone communication. Of course, employees have the ability to increase their level of participation through further engagement or wellness activities, should they choose to do so. Where other wellness plans count on 3% engagement, our program model, with requirements as simple as reading an email or a text from a coach, allows us to target 100% engagement every month. Other activities that qualify as participation include things like attending a wellness education course, webinar, or online support group, and committing to a fitness, nutrition, or stress management program. The Bene-Fit approach is this. If you want someone to change their behavior, in other words, do something they are not currently doing or stop doing something that they are currently doing, you have to make it easy, beginning with a clear and motivating payoff. If that payoff is too far in the future, like quitting smoking, exercising, or eating healthier, the change is much more difficult to achieve. But if the payoff is realized immediately, then behavioral change becomes achievable and is much more likely to occur. Enrollment begins with a health assessment called pseudoscan, a simple process that takes only 2 minutes and is typically done at the company during open enrollment or when the employee is initially hired. Pseudoscan is an FDA-approved biometric screening device. Originally developed to monitor diabetes, Pseudoscan uses electromagnetic plates to measure the chloride concentration in an individual's perspiration. Totally painless and non-invasive, this procedure produces information which, when combined with a person's age, blood pressure, and weight-to-height ratio, provides a surprisingly good health baseline. This screening is typically repeated annually, although it can be done more frequently for employees with high risk factors. Pseudoscan can identify early warning factors for diabetes and heart disease as much as 10 years prior to onset. It also qualifies as one of the monthly participation activities. In addition to the Pseudoscan assessment, the employee fills out a health risk questionnaire in the first month after enrollment. The questionnaire also qualifies as one of those monthly participation activities. Every month that follows, the employee will continue to participate in wellness activities to ensure compliance. Both the enrollment and ongoing compliance processes are equally simple. By creating a program that is easy to comply with and provides significant and immediate financial rewards, Bene-Fit has averaged 88% participation among eligible employees. This is especially impressive since the program is totally voluntary. While employers are not going to move the needle on health insurance costs with the typically abysmal 3% participation of other programs, they will make a huge impact on expenses and the health of their employees with the 88% participation that they can anticipate from the Cypress Bene-Fit program. The final tool in the arsenal is data analytics, which Cypress uses to achieve its program goals. Cypress partners with Bene-Fit Science, a data analytics company that analyzes all of the data collected on claims expenses, employee health screening, and compliance statistics. This data provides two types of information. First, employers use the aggregate data to model long-term trends and expenditures and make informed decisions necessary to achieve corporate goals based upon that information. Second, wellness coaches analyze the data and update the employee on their progress to help them set and achieve individualized goals and stay on track. Cypress provides a Bene-Fit employee portal that empowers employees to monitor their own progress. This portal uses a game-like structure that makes the process engaging and fun, ultimately helping employees to become more aware of their risk factors and allowing them to watch their improvements. The portal is also a place where employees can engage with their wellness coach and watch videos related to their specific health risks. Let's take a look at how your compensation is enhanced with the Bene-Fit program. This represents a typical supplemental enrollment by any one of the leading national providers. We'll use the example of 100 employees, where the average supplemental broker will see roughly half of the eligible employees and sell products to 40% of the people they see. So, out of a group of 100, they might enroll only 20 people. They'll write an average of $600 per employee in annualized premiums for a total of $12,000. Based on a 30% average commission, you would then earn $4,000. Now let's look at the same group enrolling in the Bene-Fit program. Our participation rates average 88%, and our annualized premium averages just over $1,500 per employee. So in the same group, we would enroll $132,000 of annualized premiums. Based on our average broker share of commissions, you would earn over $28,000. Not only would your commissions be significantly higher, but we also provide full-service solutions to minimize the broker's workload and create a great experience for your clients. Our services include sales support, enrollment with one-on-one service, a call center with online support, client services with monthly quality control calls, claims and billing support, and of course, customer service. We also provide local sales support, assistance with client presentations, product training, and marketing collateral. Contact us to set up your marketing agreement. In addition, the Bene-Fit Wellness Plan gives you, the broker, and the employer flexibility in structuring the Bene-Fit program. This flexibility includes the opportunity to increase deductibles and add a gap plan to cover the employee's out-of-pocket expense, change the employer contribution to offset rate increases, and allow employees to use their Bene-Fit bank to cover additional out-of-pocket costs, and shift benefits from employer-paid to employee-paid and enable employees to cover these with their Bene-Fit bank dollars. Also, since this plan provides employees with the funds to purchase additional benefits, you eliminate the need for high-pressure selling. Our enrollers truly act as consultants to help employees understand their current benefits and ways to reinsure the financial risk and well-being of their family. The Bene-Fit advantage is threefold. We understand how to engage employees and change unhealthy behaviors, ultimately providing a clear, motivating path to a healthier and more productive life. We've eliminated the upfront costs and risks to the employer through a program capable of widespread adoption. And we've provided immediate and long-term payoffs that improve the financial health of the employer and the employee. I want to thank you for your interest in the Bene-Fit program. We're excited about the opportunity to enable you to help your clients improve the health of their employees, improve the quality of their benefits program, and improve your clients' profitability and yours as well. Please feel free to contact us with any questions or speak to your sales manager to discuss the next step. Thank you.